Good afternoon, and thank you for joining us today. My name is Timothy Lee. I'm a research analyst with Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on gold and copper exploration and development today. We will hear from Marshall Koval, President and CEO, and Scott Hicks, Vice President of Corporate Development and Communications with Lumina Gold Corp. During today's webinar, they will provide an overview and outlook. Then we will take questions. You can type your questions into the chat box at any time, and we will get to as many as we can. Before we kick things off, first we need to discuss some fine print. During this Lumina webinar, forward-looking statements may be made. I would direct listeners to the company's forward-looking statements disclosure outlined on page 2 of the Lumina corporate presentation, and that can be found on the company's website, luminagold.com. For Red Cloud Securities, I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors, and participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures pertaining to Lumina. So we have Lumina presenting today. The company is focused on its Cangrejos gold copper project in Ecuador, which hosts one of the largest gold resources in the world and is advancing through development toward production. With that, I now turn it over to Marshall and Scott to update our audience on the company.
Thanks a lot, Tim. I appreciate your time and your viewers' interest in the company. Listen, we've been through a lot in Ecuador here through the last few years, but we're in a really positive place right now. And also that should bode well for our company and other operators and developers in Ecuador. So basically there was an election that just was terminated, and Daniel Noboa came in as president of the country. He'll come into office December 15th. He's already meeting and working with President Lasso on a transition. His term will run till May 2025. Now, Noboa has done something that is real positive for the mining sector. He's actually met with the mining chamber before he became the president, and that bodes well. There's a lot of positive aspects of that. You know, right now, his mission is security in the country. You probably have heard that there's been some narco-related activity in different areas of the country, but primarily employment in the country. And mining is playing more and more of an important role in Ecuador as we speak. In March of this year, mining exports passed up bananas as the number 3 export in the country. So it's petroleum, shrimp, mining, and then bananas. And there's been some real positive investment news coming out of Ecuador recently. You know, obviously, Lundin Gold continues to do really well. They expanded their plant at Fruta del Norte to 4,500 tons per day. They're doing extremely well. Mirador, which is Tongling Mining and China Rail, just announced a $625 million expansion to go from 60,000 tons per day to 140,000 tons per day. That's really good. And then you got projects like Aventus's El Domo, Curipamba, that is pretty close to production once the final environmental permits are in place. And basically right now, the Constitutional Court is looking at regulations proposed by Lasso to do consulta ambiental. That's the public environmental consulting. And for instance, Aventus had done the first round of consulting before the Constitutional Court decided to review it. So we should see that regulation in place here in the next month or so, and that'll allow a project like El Domo to go forward and get their final permits. Beyond that, you've got the La Plata project and Loma Larga waiting to advance as well. And then it kind of shifts to us with the Cangrejos project that we're at feasibility study now. And Tim had mentioned that we're going to do some forward-looking statements here, so I just put this up. But let's kind of take a look at Cangrejos. And as I mentioned, we completed a pre-feasibility study, and we're in the feasibility study as we speak. We did a financing with Wheaton Precious Metals. I'll talk about that a bit more. But basically, we're at feasibility study at the Cangrejos project, which is the 26th largest global asset anywhere, whether it's in production, resource, or development. We have a probable reserve in the PFS of 11.6 million ounces of gold and 1.4 billion pounds of copper. And then we have indicated a resource of 16.8 million ounces of gold and 2.2 billion copper, and that reserve is within that. And then we have, in addition to that, indicated resource of 3.7 million ounces of gold and 0.5 billion pounds of copper. So basically, if we look at the PFS, and the other thing I want to point out here while I run through this, we're extremely undervalued for a developer at this stage with financing. We're trading at a market cap of about 150 million Canadian. Not too long ago, we were up about 250, but we've substantially de-risked this project, and we're having, the positive government scenario in Ecuador. So we think it's a really good time to invest. And if I look at the PFS summary here, we've got a large production profile, 371,000 ounces of gold a year and 41 million pounds of copper per year. Revenue split about 80% gold, 20% copper. If you look at it on an equivalent basis, it's about 469,000 ounces of gold equivalent per year. And there's quite a few years over 500,000 ounces. So it's a tier one production profile in that regard. It's got a long mine life, 26 years, very low cost, $671 an ounce net of byproduct copper for our AISC, and then 2.2 billion MPV at 1650. And then closer to today's gold price, I think gold's about 1960 right now. It's a 3.5 billion MPV. So there's a lot of torque to the metal price, and we should see that serve the project well as it gets de-risked and moves towards production. I mentioned the Wheaton stream. It's 300 million from Wheaton for 6.6% of the payable gold production. I'll talk about that a little bit more. But that gives us roughly $50 million to move the feasibility study and some early works forward. And it commits 250 million towards production. The initial capital cost is roughly $1 billion here. So we got about a quarter of it committed for financing. Just looking at the corporate structure here, we've got 380 million shares issued and outstanding. We've got fully diluted 411. Market cap is just slightly higher than shown here. It's about 155 million today. Ross Beatty has been financing the company over the last close to a year almost. He's got a convert at 42 cents a share that he'll be converting here soon. It's part of the Wheaton agreement. He has to do that. I think from an investment perspective, as we sit today, investors who aren't in the story would come in roughly at the same sort of price that Ross is converting. So it's a good time to look seriously at the company. Our trading range has been between 27 cents and 71 cents. Ross has roughly 21%. An Ecuadorian entrepreneurial group has 18%, management and the board 9%, and Route One out of San Francisco, a diversified fund, has 6.7%. We have coverage by Red Cloud, Raymond James, and Haywood. So if we look at Ecuador, I've sort of mentioned all these projects that have moved forward here and ones that are in the waiting to be constructed. But since 2018, Ecuador has really expanded the mining exports. And like I mentioned, it became the third largest exporter. And then if you look at the attractiveness to invest by the Fraser Institute, Ecuador's continued to rate highly. It came down a bit in 2022, but it should go back up here with the new government in place. Just taking a look at Cangrejos. Cangrejos has a lot of things going for it. Right now, there's the Puerto Bolivar in the upper left hand of that little photo there. That's where Mirador is shipping their concentrates to. So at Cangrejos, we have produced a gold copper concentrate, and we would ship out of that port. Mirador is going all the way across the country, 350 kilometers. We're only 40 kilometers from it. We've got good power to the site. We've got paved roads within 8 kilometers of the camp. plenty of water, low elevation in Andean context. The highest point on the project is 1,350 meters above sea level, and no communities directly on the project. We have a really good working relationship with the communities. Right now, with the 9 drills that we have in the field, we've got over 150 community members helping us just the logistics of the drill program, moving drill rigs, building drill pads, and actually our communities within the immediate area of interest of the project can't supply enough workers, so we're bringing in community members from further out. So that bodes well. We've done significant amount of drilling on the project. Right now, the infill drilling program we're doing to take the first 3 years of the mine life to a measured resource that can convert to a proven ore reserve. We're almost complete with that drilling. We get a lot of questions about the project. What's the most common questions we get? You know, does this thing have scale? I mentioned it's 26th largest primary gold asset. It's the 13th largest undeveloped primary gold deposit by production capacity. Basically, Cangrejos, you got to think about this more in the context of not your traditional gold project, but more of a copper porphyry project. It's a very large, homogeneous deposit. It's more akin to a Cobre de Panama, Mount Milligan, Red Chris. If you look at it from a copper equivalent scenario, all those projects have been built and are in production now. How does the economics work with the grade? Yeah, we get hit with as a low-grade deposit, but also it's very low stripping ratio. I'll talk about that a bit more. We've got cheap power in the area, 7 cents a kilowatt hour. We have good infrastructure, and there's economies of scale of this project. We're going to start at 30,000 ton per day in the PFS, going to 60, and then ultimately in year 7 through the year 26, we go to 80,000 tons today. So you get economies of scale with that. The CapEx, it's about $925 million to do the initial 30,000 ton per day. That does not include VAT, which is 12%, but that's refundable. And you've got projects in Ecuador that have been financed internationally and completed in a similar sort of initial capital range, Fruta and Mirador. The PFS allows for the investment production agreement to be negotiated. We're in the process of negotiating that. That'll fix the royalty rates, the tax rates, et cetera. It'll exempt you from duties for major plant and equipment. So basically, we're in progress with that as we speak. If we look at Cangrejos, the Cangrejos pit on the right, that'll be mined in years 1 through 7 in the PFS, and then Gran Bestia comes in. Cangrejos continues on to year 17, and then Gran Bestia will be the balance of the production. Gran Bestia is a bit lower grade than Cangrejos, but it's quite a bit lower strip ratio. And overall, between the two deposits over life of mine, it's 1.26 tons of waste per ore ton. Here's just a cross-section looking at it. What you can see is the red jagged line there. That's the mine plan pit. We did this at $1,500 gold and for the NPV cutoff, but the pit limiting shell is $1,100. So what you can see here, there's quite a bit of potential high-grade material below that pit. You can particularly see that in Cangrejos. So this should bode well for a longer mine life than what we have in the PFS. Just looking at the probable reserves, basically what you have is 11.56 million ounces of gold in the mine plan and 1.4 billion pounds of copper. Metallurgy is good on the project, basically looking at about 85% total recovery. Of that, 7% in the PFS was produced as doré, and 78% of that is as a copper gold concentrate. Basically, the copper recovery is 79% overall, and gold overall for the project is 85%, and then 55% for silver. There's a lot going on this slide, but I'm going to have you look at the bottom left-hand quarter there. So we're looking at $925 million initial capital. The expansion in year 4 is another $342 million. And then the final expansion in year 7 to 80,000 tons per day is another $111 million. If you come over to the right here, you look at the IRR at the base case 1,650. It's 17% with a 2.2 billion NPV. But if you come up to closer to today's metal prices, you can see the IRR is 23% and 3.5 billion NPV. What does the Wheaton Gold Stream do? As I mentioned, it's about $50 million for the feasibility study. We'll have our next payment in November. We've already drawn the $12 million initially, but basically the net effect of that at $1,650 gold and $375 copper, it takes the NPV down to about $2 billion US, but it increases the IRR to 19%. So just a little bit more on the project details here. So we're working right now with a lot of trade-off studies. We have several in progress. We're looking at, for instance, one of the main ones is there's about 300,000 ounces of gold that is potentially recoverable in the saprolite, where you would have to pre-strip at Cangrejos. In the PFS, we didn't have enough work done, so we treated that as waste. So now we're looking at, can we bring that into the mine plan early, and the benefits of that. We're looking at plant locations. We're doing trade-offs on waste rock storage. Do we move that around? So there's a lot of optimization trade-off studies going on right now as we speak with our consultants, both the mining engineering, IMC, the pit slope guys, Wiley and Norrish, and we brought on Austin International as our QP for metallurgy. So we're looking at metallurgy as well. So the MET program should start at the end of December, early January, and we're moving forward with that as well. And then probably within the next month or two, we'll have the process engineering consulting on board, and then the geotech consultant that would deal with the tailings facility, waste rock storage, that sort of thing. We had the dry stack tailings facility. We've gone with dry stack. A lot of reasons for that. The economics of dry stack is coming down price-wise quite a bit, and it's becoming more competitive, a safer sort of scenario where you don't have to build a dam and impound water and tails and have the potential, if there's a dam break, to impact communities. Dry stack will be able to recycle about 85% of the water back to the plant, and basically what you're building is more or less akin to more of a landfill than a dam. So the moisture content of the dry stack will be about 15%, and we'll build that and put the water back up to the plant in a pipeline. And so we're working on whether we move the plant closer to the tailings, and we're doing those optimization studies as well. We're doing a lot of environmental ESG. I think given time here, I'm going to kind of move on, but there's a couple key things on ESG. Majority of the power in the area is hydroelectric. Our proximity to port helps us with social and emissions impacts. The dry stack tails, where I talked about recycling the water, helps the project. There's no ARD. So those things are some of the main points that help the project in an ESG perspective. And we'll continue to work on that way, look at biodiversity, environmental controls, all those sort of things as well. So just looking at the timeline here. So we're coming up on 2024. We completed the PFS. We're working on the exploitation investment protection agreement in parallel with the feasibility study. And again, I mentioned the EIS permitting is moving on in parallel with that. So we're looking at delivering the feasibility study probably in the first or second quarter of 2025. Hopefully, along with that, we'll have our investment protection agreement in place, and we'll have pretty far advanced on the environmental permitting. So that would look at sort of construction in the PFS was 2.5-year build. So that's kind of the timeline that we're looking at here. I'd mentioned earlier about the unique scale of the project on a global stage. So if you look at this, the blue bars are basically projects held by mid-tiers and majors. The gold bars are the ones that are held by developers, independent developers. And you can see Cangrejos sits in there, and it sits in a good spot. IAMGOLD is close to commissioning Cote in Ontario. Greenstone, I'm on the board of Equinox Gold. We're close to completing construction there. Blackwater, Artemis has got that in production or in construction as we speak, as well as Solaris Norte. So projects like this that can produce over 250,000 ounces of gold a year are being built. And Cangrejos is the 5th largest development project controlled by an independent. Now, I talked about the stripping ratio earlier, and like I said, we get hit on the average grade life of mine of the project, but that doesn't tell the whole story. Grade doesn't tell the story. What you have to look at here is on the right, you can see Cangrejos with these development peers is close to the bottom, or is on the bottom with this group grade-wise. But when you take the mine plan grade and divide it by the stripping ratio, it moves up towards the top. Several of these projects, for instance, Greenstone's about a 4-to-1 stripping ratio, even though the grade is 1.27 grams per ton. So this isn't everything as far as the overall operating cost of the project, but it's significant as mining is one of the major costs. So this really helps the project. I think it gets overlooked by a lot of investors. So I just want to make a solid point on this. When you look at the project, keep this in mind. So here's another slide that's kind of the investment thesis. If you look at, since we put out our first resource in January 2017, and you fast forward it to today, we've grown the resource 4x. The gold price has gone up 60% over that time period. The copper price has gone up 30%, and our share price has gone down 26%. So we think that there's a big disconnect with the market, and this 26% includes all financing and dilution related to that, or issuance of shares. So we think this is a real solid way to look at how we're undervalued, and the project is being substantially de-risked. So I think this is a good investment thesis here. We do a lot with the communities. We, as I mentioned earlier, we have a lot of employment. We're working with production chain, economic diversification, community well building, and environmental programs. And without diving into the details of this, basically, if we didn't do all these things and we didn't have the relationship with the communities, we wouldn't have a project that's advanced to this stage. And we believe we're in good position to continue all the way through production, keeping that in place. So in summary here, since we took over the project in 2014, we consolidated the concession package, which encompasses both pits, Cangrejos and Gran Bestia. We're the 26th largest resource in the world. We completed 3 economic studies, PFS. We're in the FS now. And if you look at the PFS, the adjusted project phasing offset inflationary costs. So we did the cost estimate for initial capital at the end of the last quarter of 2022. So we've captured most of the inflation in that. We converted 11.6 million ounces and 1.4 billion pounds of copper to probable mineral reserve. We have a proven 26-year mine life in the PFS and 2.2 billion NPV. And we've got a team with a solid track record that's monetized large-scale assets. We've sold 8 companies for over 1.6 billion. We're continuing to advance and de-risk this project, and we think ultimately somebody will come in larger, take us out, and build it. So with that, I'll turn it back over to you, Tim, and I did it in 24 minutes.
Great. Thank you very much, Marshall, for the very informative presentation. We will now start the Q&A portion of the webinar. A reminder to everyone on the line that you can type your questions into the chat box at any time. And we already do have a few questions here. First, circling back with the government relations and the election, how is your relationship with the government there?
So basically, the current government, Lasso government, still in place to December. Very good relations with them. I've met with Lasso himself 3 times. We're working on the investment protection agreement with the production ministry, Minister Prado. I've met with him several times also. The Ministry of Mines, we have a close relationship. Basically, I think what will happen here is Noboa is going to bring in his own ministers. Some may stay, transition, we don't know that. He has named a new minister of production, and that's an important ministry because that's who you negotiate your investment protection agreement with. And he's brought in Sonsoles Garcia as the minister. He's already named her, and he's starting to fill out his cabinet. So I think we'll continue with good relations with the new administration. And obviously, once they settle in, we'll continue to talk to them. And hopefully I'll get a chance to meet with Noboa directly to talk about the project.
Great. And one interesting question here is Lumina, is the stock held in any ETFs?
Scott, over to
you.
It
is not right now, no. Okay. It's a little bit, it's under the threshold for the JDXJ.
Okay. Is there a strategy to operate a low carbon emitting mine?
Well, basically, the things like the hydropower and that sort of thing, it's already going to have a low carbon footprint in that context. And obviously, we'll look at all those things going forward. One of the things that we've done, and this goes into the ESG kind of bucket, which should help with carbon capture, is we planted an enormous amount of trees on the project. And a lot of the land is disturbed grazing land and timberland. There's no primary forest or anything like that. So we've got a pretty aggressive program where we've gone in and created habitat by planting well over 30,000 trees, and we'll continue those sort of things. And that should help with the carbon footprint. Scott, do you have anything to add that I might have missed there?
Yeah, I mean, just transport costs, it would certainly benchmark in the top of any mine in the world for transport costs to get the con on a ship. I mean, you're only 40 kilometers from the port there. So that's a huge impact on, emissions.
Great. Now, there are 2 questions that are kind of related on, obviously, given the size of the project, this might be is no doubt on the radar of some producers. But are there any NDAs in place with potential suitors? And also, what is the catalyst or event that might subsequently prompt a takeover offer?
Yeah, maybe I'll start there. So, I mean, yes, we always have NDAs in place, and, people are watching the drilling and the progress on the project. Outside of kind of our specific situation, I think we've seen Barrick recently take up some land in the country, with an earn-in from land on the government just around Mirador. So that was about a $27 million earn-in. So that's the first we've seen of them in country. So that's quite positive. Newmont, as a function of their Newcrest acquisition, will now be there. They'll have their kind of 32% stake in Lundin Gold, as well as their stake in Sol Gold and some greenfield exploration grounds. So they will be in the country as well by the end of the year when that transaction closes. So those will be the first kind of major gold producers that have been there since all the mining reforms started. We haven't seen Agnico yet. And, I think a lot of the intermediates are starting to have to look at, more options, especially with Canada and the US being just so expensive for assets and frankly, also quite picked over. Okay, oh, and sorry, a catalyst for a takeover. I think Marshall's point of finishing the drilling at the end of the year, that's a nice de-risking point. I think people would like to see the exploitation agreement terms with the government, so we're working on those now. That would be another big de-risking point for somebody to come in and look at it once that's settled. I think everything we can do over the next 2 years to put a bow on this is going to be helpful, which is really the exploitation agreement, the permits, and the feasibility study.
Right. And one general question here, but what worries you most that might prevent you from proceeding as planned for the next couple of years?
It's not a lot that worries me on the technical de-risking side. We're pretty far advanced in that. There is some uncertainty with permitting process, the regulations. I mean, that's slowed down Adventus right now. We think that'll get resolved. So those sort of things worry me a bit. On the flip side of that, if you would ask me that question before this election, the first round, there was an indigenous candidate, Yaku Perez, who has made his platform anti-mining. If you recall, when Lasso was elected, Perez almost beat Lasso, and Lasso would have got in as president in the first round. This time around, instead of having over 20% of the votes in the first round, Perez only had 4%. So that activism on him and that concern with the indigenous anti-mining platform as president has gone away. That doesn't mean that there'll be issues going forward with some of the indigenous. But one of the things that's a benefit to Cangrejos, we have no indigenous communities in El Oro province or near us. So if you're doing a project you're within indigenous territory, you not only have the environmental consultation, but you have this consultation called under ILO 169, Consulta Previa. We don't have any of that. So that's positive. But really, it's really the permitting is the only thing that I have questions about. I think we'll get there without much of an issue, but that's about the only thing that worries me. And then I guess, Scott, maybe financing this, does that worry you as an ex-banker?
Yeah, I mean, look, cost of capital for everyone's gone up. Obviously our base case business plan is to be taken out, but in the event we have to build it, I think there is project debt available for this type of project. I think there's lots of solid options on the copper offtake because it is good, clean copper con with high gold values. Obviously, with the Wheaton deal, we've de-risked 25% of the capex already, and that financing angle. So, at 750 net capex left, it's doable. But cost of capital has gone up for everyone. So it's something we're definitely keeping an eye on.
Absolutely.
I see that one there, Tim.
Yeah.
Are there any deposits in the vicinity which could be amalgamated to improve the scale of the project? So, I mean, from a scale perspective, we have so much material at our project that if you were a larger company that wasn't capital constrained, you could build a much bigger project out of the gate. So, we've phased it 30, 60, 80,000 tons a day to make it more achievable for a smaller company or an intermediate to build. A larger company like a Newmont, might build it 50,000 tons going to 100,000 tons, for example. Then that's certainly feasible at the project. There are some other surrounding projects that would have, similar grades and fairly large tonnages to Cangrejos. Whether trucking that or makes sense or is not, overly clear to me. I don't know, Marshall, if you have a view on that, like a Sunstone or some of those ones around there.
Yeah, I don't have a firm view on that now, but I'd like to point out that within our land package, there's still a couple of really good exploration targets that could add size within our own concessions. There's what's the name of I want to say Valerio, but that's not the name of the deposit. There's Pan Azúcar, and then there's, do you remember the name, Scott? I'm drawing a blank right now.
I'll look it up while you're talking.
Yeah. So we do have other porphyry targets that we've done work on, and there is some upside exploration. So you could potentially bring in additional deposits into the mine plan down the road. But right now we have enough to go 26 years and off we go.
Valorizo.
Valorizo, yeah.
That far north of the concession package.
Yeah, and that's in the presentation. You can take a look at that. So there is some blue sky still.
Great. Great. And there's one question here on insider buying. Have any insiders been buying as of late at these attractive prices?
I think I might have been the last one to buy, and that was probably at 50 cents. I didn't buy any when it was down in the 30s recently. I guess the biggest insider buy is going to be in the next month here. Obviously, Ross is converting his convertible debt that funded the company prior to the Wheaton deal at 42 cents. So he's going to own. He's going to go from owning just over 20% of the company to just over 27% of the company when that converts. So he's converting all of that at 42 cents, and we're trading, I think, at 41 today. So that's probably I'd like to think that my incremental buying or Marshall's incremental buying does something in the market, but I think Ross has a bit more sway. So he's converting, $15 million Canadian.
Okay, great. One question, kind of ever popular, but obviously with the Wheaton deal and some certain things going on there, how much cash do you have currently, and how far will that, and the funding coming in, how far will that get you with your current plans?
Yeah, so when we did the Wheaton deal, the broad plan was, and I'm rounding numbers here, but $35 million to get through the 2.5-year period for a feasibility study, and that included all the drilling and G&A and whatnot. And roughly $15 million for surface rates acquisitions and some infrastructure stuff. So that was kind of the genesis of the amount of money that Wheaton's giving us pre-construction. So 48 million pre-construction, 252 during construction. So we have to see how the infrastructure and the surface rate acquisitions go over the next period of time. But we're on track with our timeline so far.
Great. Great. I think that's all the questions we have. Maybe one quick summary here, but just to review, what are some key catalysts and news items that we might expect from the company in the coming months?
Yeah, so we'll be appointing the lead consultant on the feasibility study here in the near term. I think in 2024, probably the largest catalyst will be hopefully announcing the exploitation agreement terms with the government that'll form the basis of the IPA. And then, announcing just pieces of the feasibility study and updates on the project as we go along.
Great. Well, I'd like to thank Marshall Koval and Scott Hicks for presenting today, and thank you everyone on the line for tuning in. Just a reminder that Red Cloud Securities will be back tomorrow afternoon when our webinar series continues with Canada Nickel Company presenting Thursday, October 19th at 2 p.m. Eastern Time. Have a great rest of your day.
Take care.
Thanks.
Thanks, everyone.